next session is Catalyzing Change, the investor role in climate solution. This is a panel where we will discuss the importance of supporting and funding startups, developing sustainable technologies and practices. I would like to invite Ana Laura Fernandez, Vice President of Impact Investments at Fondo de Fondos, managing the LATAM Impact Fund with over 70 million of assets to invest in funds and companies with positive social or environmental impact. Welcome, Ana Laura.
Thank you so much. So if you want to join me, please, in the panel, Bill, Magda, Maggie, Luisa, and Roger. Thank you so much. So first of all, it's a pleasure to be here. I want to say thank you to Dalus Capital for organizing this event and for the invitation. Thank you, Rogelio, Diego, Gabriel, and all the Dalus team for this. And it's a pleasure to be here. And I would like everyone to please introduce yourself. Can we start with you, Bill? Could you grab your microphone, please?
Is this on? Can you hear me? Oh, yeah. Hi, thank you for introducing for this panel. Thank you, Dalus, for putting this all together. I'm Bill Pierce. I work for DFC, the US DFI. You heard my colleague Aparna earlier, so I'll try not to repeat as much stuff that she said already. So I work in the investment funds department of DFC. I've been there since it was OPIC, which some people might have remembered way back when. So our job is to provide capital to private equity, to funds globally. I'm on the LATAM team, and we cover all strategies. There's three of us on the team. We cover infrastructure, venture, credit funds, private equity funds, and even smaller catalytic funds, like $10, $20 million funds, which we have also invested in. So we run the gamut. And we are finishing up our fiscal year now, and it's the end of this month. And so we're looking, as we all do, we try to create a pipeline of funds for the next year. So thank you.
Great. Well, it's fantastic to be here. Thank you so much to Dalus for the invitation. My name is Magdalena Coronel, Maggie Coronel. I'm Chief Investment Officer at IDB Lab. IDB Lab is the innovation lab and the venture arm of the Inter-American Development Bank. I'm here with Edgar Parra and Ana Laura Mendoza, who are part of our climate team. What we do is we invest in venture capital funds. We invest in funds that look to invest in Latin America and the Caribbean. We invest in tech companies, as well as we provide loans. And what we are trying to do with this investment is actually create a positive impact in terms of the base of the pyramid, as well as reducing gender and diversity gap, and everything related to climate. So adaptation, mitigation, regeneration, and cross-cutting from these three verticals. So it's a pleasure to be here.
Thank you, Maggie. Luisa?
Thank you. Thank you, Dalus, also for the invitation and hosting such a great event. It's kind of kicking off Climate Weeks, New York Climate Week next week, Mexico event this week. My name is Luisa Sucre. I'm an investor at Collaborative Fund. We are a New York-based firm investing in companies at the intersection of for-profit and for-good. We describe our thesis as the villain test, basically investing in companies that both make money but also have a positive impact. And so the categories that we have historically been focused on over the last 14 years have been climate, food and ag, fintech, health, and early childhood education. And then in terms of stage, we invest anywhere from pre-seed through Series C across two funds. I have a soft spot for LATAM, the ecosystem, the talent, everything, because I'm Venezuelan, born and raised in Caracas. And it's a pleasure to be here.
Thank you. Roger?
Thank you, Ana Laura, and thank you all for being here. It's a testament of your commitment to building this ecosystem and helping people in the world, especially in Latin America. So I'm Rogelio de los Santos. I'm part of Dalus Capital, the founding managing partner. an entrepreneur at heart that has been actively engaging since 2007 when I had my last exit as an entrepreneur, and building capabilities in the Mexican ecosystem, early stage, well, innovation, entrepreneurship, and early stage investment arenas. Very close to university ecosystems like Tec de Monterrey, and since last year at UT Austin as well. But definitely, we have here one of the first investments we did in climate with Andres. Raise your hand on this. In 2011. Back then, I met him at COP21. When did we meet? In COP in Cancun. 16. Okay, it was earlier. And back then we were exploring the types of innovations that we could be supporting in Mexico and Latin America. But since 2017, with the commitment of Diego and the rest of the team to climate, we have actively developed different capabilities from a systemic perspective. And we are focused on investing early stage as a fund manager, doing seed and Series A investments. That's our sweet spot, with a focus on basically three big areas. One that is inclusion of how do we leverage technology to be able to enable solutions to be relevant for bigger customer segments out there, people or companies, SMEs, but also with a focus of creating impact. And we measure impact, we commit to not only at the fund level, but also at each of the companies. And climate is at the core of what we do. So we keep investing, and we think that Latin America has a lot to contribute to climate innovation and climate impact.
Absolutely, Rogelio. And well, I am responsible for the LATAM Impact Fund in Fondo de Fondos. We invest in funds and in direct investments. In fact, there are several of the funds that we have invested in here in the room, so I'm very glad about it. And climate for us is really, really important as well. And I want to mention that this is a very special panel that I had never had the opportunity to be in one like this before. We seem to be 5, but we are 7. Because we have 2 babies coming, 2 new generations listening to what we're doing and celebrating that we're taking care of this world because they need it.
And so their future.
Please, a big applause for them, for Luisa and Maggie, because it's fantastic. Thank you so much. So my first question will be for you, Luisa. How do you how do you appreciate the climate for investing in climate tech startups in LATAM, and also versus US, because you're based in US. You just told us that you moved from New York to Miami, so you have also been in the Bay Area, so you can tell us a lot of what you see in LATAM and what you saw before in the US as well, please.
Absolutely. Yeah, I would say Miami is an extension of LATAM, so I do feel like I am now in LATAM, fully based. But yeah, it's a really interesting question, particularly in the moment we are right now in the market. In the US, we have seen climate over the last 2 or 3 years been insulated a little bit of the correction in capital flowing into the category. I would say climate and AI are 2 categories that have continued to be really, really hot, fast-paced, great founders going in. And that is a result of what we were talking about a little bit earlier, just the combination of things that fall into place for these ecosystems to be built. And so in the US, you have the Inflation Reduction Act, you have a lot of capital, and you also have the institutions that support the technology and the innovation. And so you have universities working on deep tech and leapfrog technologies, and you kind of have that support system. I would say in contrast with LATAM, where I see a lot of opportunity and certainly a lot of talented entrepreneurs, there aren't as many resources available for people wanting to build companies in this space. Particularly in climate, I think LATAM is a huge part of solving the climate challenge. We're 7% of the emissions, but Unfortunately, we're going to be impacted way more than that. And also, we have the benefit of natural resources, forests, a huge percentage of the global food supply chain. And so I see that connectivity getting closer and closer between LATAM ecosystem and US. The nuance, I would say, is a little bit less capital, but the founders I have the pleasure to work with in the climate space are way more aware of business models that are sensitive to economics. In LATAM, we won't be seeing companies that ask consumers to pay a green premium, whereas in the US, you have a little bit of that, whether it be because you get a subsidy or you get something else. And LATAM is very, very cost sensitive, but certainly a lot of capital and opportunity growing.
And you were talking about food security, and it's impressive that LATAM will become 1/3 of the producers of food for the future. So that is a challenge. We have a lot of soil degradation, and that is something that we really need to stop. And I don't know if someone else wants to jump in and mention a little bit more about this, why investing in climate solutions is so important in LATAM.
Yeah, I think like what Luisa was saying is extremely important for LATAM. When you see the rounds around climate, that is a very low percentage of the rounds between pre-seed and Series B, there's a very large component of ag and food tech. And I think that relates to us being some of the largest producers of food for the planet. And I think it's an opportunity that actually the entrepreneurs need to be thinking about.
Absolutely. Sorry. Absolutely, I totally agree. And now I would like to ask Rogelio, what trends do you see in the region in climate investing?
Well, as Maggie was just saying, and I don't know if you saw and downloaded the Startup Radar, the ag and food tech section is like overwhelming, and it keeps evolving faster, much faster than other areas like mobility or energy. But I would say that since we are a very important producer and we are basically the US or North America could not be the same if we're not producing what we're producing today. Similar to Southeast Asia, I was there just a couple of days ago, and the amount of people that live in that region, if it wasn't for Southeast Asia, they could not be ready to be served. So in our perspective, everything around AgTech, including water, that will basically fuel the AgTech, but also the industrial space that is critical for our future, is one of the top priorities. Now, let's do one reality check. The ecosystems of Latin America are nascent. They're on the early stages. We have maybe 10, 15 years of experience. Some of the first funds that have been launched in the region are about to close their first cycles. And the early signs of development in this ecosystem were in e-commerce platforms and fintech. Those two sectors dominated in the amount of capital that was captured and the value that was captured. Of those $225 billion in those 10 years, 70+% were captured by these two categories. Now, we see a lot more diversification happening today, but what is really important is that when we started back in 2011, 2010, only $70 million were being invested into the asset class in Latin America as a region. The peak was in 2021 with $16 billion. That's a test of how much capital the region can absorb. And we think that that has attracted very sophisticated entrepreneurs that are no longer first-time entrepreneurs, that have launched and scaled very big companies. And that's what we're looking for. Now, the reality is that in the process we have gone through is first we have been educating ourselves about how to measure impact and how to learn how to gauge what is really impact around climate. We're sponsors of an initiative called Catalyst that has been funded by the Green Climate Fund and by the German government. We have, in fact, tomorrow the pitch event of the accelerator program. And with pipeline of 8 countries of Latin America, we were able to capture 300 companies in the first cohort. That's starting to increase very fast. And that's a sign that most of the early stage the startups that we see are at the early stages, pre-seed, seed stages. We need to find those companies that have the right mix of technology and solutions and value propositions that can scale. And that's where the inclusion strategy comes in. I was hearing from the presentation early this morning on the fireside chat that scale is important. And for us, disrupting current markets, it's very difficult to change the incumbents. And more our markets are very oligopolistic. So what we need to do is basically fuel change with the energy of entrepreneurs to come with new solutions, with new rules that can come with a better mindset around climate protection. And with that, we think that funds are moving closer to to see and invest in companies that have technology and software embedded, AI embedded into those solutions, like around AgTech, like tracking traceability of food around all the value chain. That's one example that I see similar in Latin America to Southeast Asia. But we're getting more comfortable in investing in other types of innovations that are even science-based, but at the end that they have the scalability to perform and deliver the returns to the LPs.
Thank you. And would someone else like to comment on the trends that you see in LATAM?
I'll start. Sure. Well, first off, we invest in funds, and so at least my group, we also do direct equity investment as well, but it's a different department. But we are looking a lot to the manager to see the trends, because that's what we're trying to back the team and the tracker of the team. Now, I must be open, Kimono, everybody here, and be upfront that we are supporting Davos, his third fund, just so everybody knows. So I don't want any bias, but
we as well.
Yeah. Okay. So, yes. And I think one of the reasons we chose Davos a year ago is because they're committed a certain percentage of the investments to go into climate tech or climate solution type startups, and that's sort of a trend we're seeing more and more as we're looking at funds in Latin America, and not just Latin America, also in Asia. Particularly in Asia, because I think we're supporting venture funds in that space as well. I guess the trends I'm seeing, and I'm trying to put a little bit of history here, because this is not the first time we've looked at the climate space. I'm giving my age here, because when at OPIC, we started looking at renewable funds back in 2007, 2008, when we had RFPs, calls for proposals. Unfortunately, the financial crisis hit, so a lot of those funds couldn't raise money. So we tried again 2010, 2011. But those are all renewables, basically, more mitigation, as well as some natural resources. But it was still very early stages back then. There wasn't really a team to track records. Speed up to today, DFC, 2021 we are now focused a lot more on the climate change solutions, not just in funds, but in direct equity and loans and PRI, as Aparna had mentioned earlier today. And it sort of overlay all what we do going forward. So what I guess, short answer to a shorter answer to a long answer, is that we're seeing changes from traditional renewable mitigation to more adaptation, resiliency, and down to the startups that are supporting the growth of those industries, whether it be in water, whether it be in reforestation, whether it be even general solutions for renewable energy. We see it more and more across the spectrum.
I think also one of the trends that is really important for everyone to keep in mind, and taking a look at bottom up, is the fact that a lot of VCs are looking for climate, right? A lot of VCs are interested in climate tech, are actually thinking about climate tech in part of their strategy. And if you look one step up, it also speaks about the interests of the LPs, the limited partners that want to invest in climate, because this is an extremely important conversation, even more for development agencies like ours. So when you start looking to the LPs and there's interest in climate, and when you look into another step further, the Green Climate Fund, other platforms that actually have a focus on climate and have a lot of liquidity on climate, this is something that is actually running the liquidity and running the interest of the GPs. The conversation here, or the question here, is how we align the deal flow, right? As Rogelio was mentioning, we're still seeing some shy deal flow in this regard, but we are seeing also is a lot of interest from venture capital funds. So if you're thinking towards an agtech, a food tech company, it's extremely important to have the climate alignment really nailed down, and how you're going to measure that impact that you're creating, because this is extremely important from the different layers of investors.
And continuing with you, Maggie, it's very interesting for us to know, what do you look for when you're investing in funds and in startups?
Sure. So in terms of funds, and aligning to this conversation, and I think something that Rogelio was mentioning is actually the expertise that the fund manager has in these topics, right? We don't want to see a fund manager that is talking about climate because there's liquidity on climate, and therefore they don't have the expertise to actually select the best deal flow. We are looking for fund managers that understand these topics, that are actually developing the ecosystem around this topic, and therefore that they will be able to do a good portfolio construction, as well as adding value to those companies in portfolio and helping them to exit at the right time. So extremely important, the fact of understanding this segment, understanding this industry that has its peculiarities. And in terms of startups, we actually are looking to startups that have a lead investor that understand the topic, that understand climate. We are looking for startups that actually have climate embedded in their business model. This is not something that is secondary or an alternate business line. This needs to be embedded in the main business model, that has a large TAM, and that also can have the muscle to actually measure the impact that they are creating. Because the VC fund, the LPs, the platforms worldwide are going to be looking into climate-related KPIs.
And for us, team is really important, as you mentioned, in both, in funds and also in startups. If you don't have the right team, then even if it's the best business model and you think it will be fantastic, if it's not the right team, it will not work. If it's not a perfect model, but you have the right team, they will do the changes needed to make it really work. So for us, team is also like the first thing we see in each investment that we do. And Bill, what are the things you look for?
I can only reiterate what Maggie has said. We do the same thing. I mean, as an old colleague of mine who used to run IFC's investment funds department said, when someone asked him, what do you look for? 3 things: team, team, and team. And that's very true in fund managers. And so that we look at them, we look at due diligence in an unusual way for any fund manager, the track record, team cohesion, how well do they work with, what's the value add to the companies they invest in? Are they minority or control investors? I guess in venture it's mostly minority, but in minority, what control rights do you have? These are, and what has been has there been any strategy movement over the funds they've done? And we try to see consistency, and if there have been strategy movements, if it's due to market pressures or market issues, like we've had a number, whether it be the financial crisis, COVID, we understand changing strategies. And we also want to see managers who admit to their mistakes. I mean, particularly in venture, because it is a lot of write-downs and write-offs, more so than private equity or infrastructure, which I've been used to most of my life. And those who are honest, know what they've learned from mistakes, are some of the managers we think that will be successful. that is sort of what the basis of what we look for in our managers. And what I also do in due diligence, not only do we meet the management and the team, we want to meet the portfolio companies, the management of the portfolio companies, both existing ones, basically, why did you choose X manager versus Y or Z manager? What value do they add? Do you have are your interests aligned, which is very important, because at the end of the day, a manager has to get out within 10 years or less, depending on, or more, depending on the term of the fund. And then we also try to talk to the pipeline companies as much as possible to get a feel, because that's what we will be investing ultimately going forward. And we know pipeline companies come and go, but the ones that stick, even as they're fundraising, because sometimes they haven't got to a first close, and they stick with them, that tells you something. So those are sort of things we look at in addition to what Maggie had mentioned.
Yes?
Can I add something? Investing in climate is not a new wave. I mean, it cannot be a wave. It has to be a lifetime commitment. And that's why purpose-driven entrepreneurs, purpose-driven GPs are needed in this industry. And as we were talking before in the room, we need to see have a view of a long-term view, but with a very clear action plan of what we're doing today to build and create the synergies of an ecosystem to reach those tipping points at where now the innovation and inventive of many different people from different arenas start to collide, and we create a movement that changes the world. That's the thing that we need to see, and that at the end drives our decision making, also from our side to the entrepreneurs that are fully committed to this.
I love it. Entrepreneurs and fund managers with purpose. It's something that we really look for. And just taking in account what Bill mentioned also in the due diligence process, something that we look for also in fund managers is that they are not micromanagers with the startups they invest in, because they can kill them. If they are asking for reports and reports and reports, and instead of letting them do their work, what we love as an answer in the due diligence process from a startup is them saying, the fund was with us when we needed them. And they really supported us in pivoting our business model or in opening doors and selling. So that is something that I just wanted to point out here as well. And Luisa, can you tell us a little bit more about the challenges and opportunities that you see in the space of climate investing?
Yes, of course. But just to add one thing to that, I think that particularly as you think about the founder side of things, most founders have a group of people, a group of investors brooding for them, supporting them. And so it's not every founder that needs the same thing from the same investor. And so we're really aware, and we talk a lot about that adaptability. There's founders that want to meet every week. We're there if that's how they want to do it. There are also founders who want specific things in terms of value add from their investors and being really mindful of adapting to the circumstance. In terms of opportunities, I'll start with that because I do think that that's the most exciting. I think, Rogelio, to your point on e-com and fintech being the first wave in LATAM that we saw, I'm really optimistic that climate is the next wave we'll see. I do think every company will have to have a climate strategy, even from corporates, how they manage their waste, how they think about their emissions, production, everything. And so I think this is becoming so prevalent that it brings a lot of opportunity. And I think that's combined with the ripeness and talent that has been developing over the last decade. So we see a huge concentration of accelerators, deep tech accelerators in particular, in Argentina and Chile that have bred amazing teams. And so, for example, one of the companies that we invested in is a company called Phage Lab, which basically what they do is they have one of the largest libraries of these bacteria, bear with me, and they have combined that with technology to be able to identify bacteria really, really fast, create treatments for bacteria, and apply this for food production, particularly in livestock, so starting with poultry. And so that is a climate tech company that came out of one of these deep tech accelerators. They have a decade's worth of technical research experience, but they're just now starting to be able to tap into the capital that is coming into the climate sector. So I think that that's a huge opportunity that for founders, investors, and hopefully we'll continue to see this at the latest stages. So Series C, Series D, and hopefully exits, that will continue. In terms of challenges, I think that it is a winner takes most in most small sectors for LATAM, and so there is this kind of have and have nots. If you are able to raise, then you can raise a lot more money afterwards, and then if you're struggling to raise, then that sets you up for a really hard path. And so I think that that's still one of the challenges I see, that because the ecosystem is still emerging in terms of amount of capital, not everyone gets a shot on gold, and hopefully that will change as more capital flows in.
Would you, Roger, would you like to comment about opportunities or challenges?
Well, on the challenge side, and I can attest to Andres' experience for the last 13 years, is that besides having a strong team as one of the critical elements early on, people that can complement with their skills, but also be ready, because the incumbent's response to your solution in the market is super strong. And I don't want to go through the entire story of Energreen, of Solecito, but we've had very strong reactions from the oligopoly that manages the hot water industry, for example, in Mexico. And then from the people that are in charge of gas consumption in Mexico. And we want to get rid of both of them. but the only way to do it is being very creative. And to be able to go through all of those challenges requires a lot more support. Capital by itself will not make it. It has to be the innovation, the solution itself. But you have to innovate not only on the service or on the product, you have to innovate sometimes on producing it, you have to innovate on how you commercialize it, you have to innovate on the business model, and the sum of all of these things give you a greater chance of opportunity of scaling your solution and being able to, instead of going to take a piece of the pie that is out there, expand that market and keep the growth of that market with your competitive advantages. That's why we say that inclusion is always the best way to become a leader in your industry. And that's how we solve it, and that's the opportunity.
Maggie, would you like to comment?
Sure. And I think actually building in what Rogelio was mentioning, right? All the innovation that this industry requires, I think there's 3 big challenges. And this is a mix of challenges for fund managers as well of startups. First challenge is financial returns. So we have 2 types of funds, right? The climate tech funds, the question is, do you have enough mature deal flow to get returns to your LPs in 12 years? I'm gonna put 12 years out there instead of 10. In 12 years, please. In 12 years to make sure that this is not just a fund, this is a family of funds that will be supporting climate tech. So on the climate tech venture capital side is deal flow. Is there mature deal flow for fund managers to return financial returns? On more traditional regenerative type of model, are you gonna be able to have those financial returns interesting enough to bring private sector investors to the table since day one? So financial returns is a key, I think, challenge or validation that needs to happen. The other validation, and we were talking about this in the room backstage, is it's fantastic to have pre-seed, seed, Series A, Series B funding, but what happens afterwards? climate tech companies needs a lot of funding, and we need those more late venture capital rounds there to support these kind of companies. And third is how we are gonna measure the impact, right? Sometimes in the run of like fundraising, to be able to have the business alive, we can bring some investors that might not be that interested in climate, and the climate conversation might be diluted. So those three, I think, is key for the next couple of years.
Yeah.
Please,
Yeah,
please.
yeah. I was going to say before you mentioned, but I'm going to do a segue to it, that it's not just for climate solution funds or companies, but the biggest thing we have seen in the last 2 years is just the fundraising for funds. It's not just in Latin America, but it is particularly in Latin America. It has been the most difficult fundraising period I've ever seen since I've done funds. And I hate to say it's longer than you think I have, but it's been a long time. And particularly in venture, because after 2022 and 2023, when the market kind of came down, it's been even more difficult. Even for large, I'm looking at a very large fund manager, one of the largest in Latin America right now, not in this space. Well, infrastructure, it's kind of related. This is the first time they've come to DFIs for money because they're having a hard time getting money from the private sector. So that tells you something. Anyway, I digress, but the segue was that the other hard part, what's tied to fundraising, is exits, because LPs want to see exits from their previous funds, at least some track record before they come into a new fund. And exits have also been very difficult. Unfortunately, it's like a chicken and the egg and a double-edged sword. The markets have been very tough to get out, not just Latin America, but also in Africa. These are the two areas we do a lot of work in, and the exit market is terrible for whatever reasons. And those who can get through, those who have the good relationships with their portfolio companies, not relying on the stock market or any markets, but who know relationships with strategics, or structure their deals for buybacks or what have you, they're the ones who I think are the ones who are going to survive and do well in periods of difficult times of exiting. So I just want to tie the fundraising and exiting together because they're pretty mutual in many ways from an LP's perspective.
Now today we expect in less than 2 hours to have news about the Fed lowering rates. That could be a wind change for growth for the growth economy, but don't expect to get to where we were. Zero interest rates are not coming back, so you need to keep focus on profitability, on having very substantial metrics at unit economics, at a way of becoming making money. It's not just about getting customers, and but nevertheless, and I agree with Bill, the reduction on the amount of companies, so the innovation economy has been hurting these past months. The amount of companies being created, the amount of investment that has been raised by funds, by companies, the amount of exits. But this is an adjustment that, in my opinion, it's almost like the same principle of Trumpeter, creative destruction. This makes the groups, the funds, the companies that succeed this phase will be stronger. And we do see a very strong pipeline and entrepreneurs that are raising rounds that are much more, the bar is much higher, but they're raising oversubscribed rounds because these are very sophisticated entrepreneurs that adapted and are bringing very strong value propositions to the market and that are attracting capital from within Latin America or from outside still.
Sorry, one thing to add to that, totally agree. I think that thinking about, we call it the villain test, which is something we talk about in every investment we make, which is we ask ourselves the question, if you were a villain and you hate the world, you just want to make money, would you invest in this founder, in this company, in this space? The answer has to be yes for us to make an investment. And that has helped us be really critical about business models that are great teams, great mission-driven founders that have the heart to build great companies, but there's a nuance in the business model, or there's a nuance in the market, oligopoly, whatever it may be, that make it really challenging. And the best way to describe it is with Tesla. So if you were a villain and you hate the world and you just want to make money, you probably would have invested in Tesla. But also if you're a climate investor that want to be part of electrifying the mobility, I think that you would have invested in Tesla as well. And so I agree. I think that this correction is really tough. We see it across our portfolio, across every single company really that is going to market. They have to be so much more sharp, so much more determined, and also have a very clear plan on what the exit will look like. What does profitability look like? You can't really rely on, I'll raise a round, it lasts me 24 months, and then capital is sitting there waiting for me. I think that has made people way more scrappy, and I think Latins have a lot of grit, a little bit more than every other region, just because of how we were brought up.
So before opening to questions, that was in fact my last question. So what do you recommend for entrepreneurs? So you already have said some of the things for fundraising, because we all believe that fundraising is the most challenging part of this ecosystem nowadays. Another recommendation that any one of you could point out?
I would say pick your investors really well and make sure that your investors are actually aligned to your interests, because if not, it might be money today, but it's going to be a problem in the future.
It's like a marriage. You're there for at least 10 years, so really think about it. Yes?
Yeah, you have to live with the consequences of your promises. So one other thing is that, in our opinion, be very curious about the possibilities and expansion, but be very objective and focused on what if you're testing and still at this, before getting customer traction or product market fit, be very cautious with the capital, the resources that you have. So be very mindful, test one thing and test the other, and then once you get traction, focus on that. And don't think that, don't go with the assumption that someone will save you further down the road, because they might not be there. And cash is king, and we have said that distribution is King Kong. So let's make sure that you're making money, that your product is out there. And be very careful of thinking that all of these investments are grants or money that is free, because that part of our lives has already passed.
That's gone. Absolutely. So we open to questions. Here we have 3 questions. Can someone help us with the microphone, please? Thank you. Andres, happy to see you.
Likewise. Andres here. So I'm the managing partner of Sadia Ventures, climate tech focused fund. My question is on emerging managers. It wasn't touched here. So if we want funds that have domain expertise, if we want more diversity in the VC industry, we do need more emerging managers. But large institutions, and I love all of you guys, DFC, IDB, Fondos, have restrictions on investing only in funds that are 15 mil, 20 plus, while emerging managers such as myself or the other new managers are managing between 5 to 10 mil usually on our first fund. So just wondering, what's your opinion on emerging managers within the ecosystem, and how can large institutions such as yourselves help with the development of these types of funds?
I think, and This is something that we have been talking a lot at IDB Lab. Emerging managers are key. Emerging managers are key in diversifying the industry, and one of the conversations that we are having, we do 3 types of funds. We do regional funds with experienced fund managers, we deal with sector-specific funds, and nascent ecosystem funds. For the sector-specific funds and the nascent ecosystem funds, we need first-time fund managers. But we need first-time fund managers with a lot of expertise, either geography expertise or sectorial expertise. And one of the things that we are considering, and yes, we had for a very long time the $20 million minimum size, is that we need to adjust in that conversation. So we are looking at fund managers with a less $10 million under management, including our own ticket. That's something that we have been implemented in the last, I would say, 3 years to adapt and to bring to the venture capital industry overall first-time fund managers.
I'll add to that. We do, granted it is for a large institution, we sometimes look for larger funds, but we have invested in first-time emerging managers. But like Maggie said, they have some sort of record, or they can bring expertise. Now, we also have to balance that, and we're going through that process right now, of what other strategies we need to do in our portfolio, where are the gaps across all strategies. So it's not just, we also have to think of the whole, of what we want to support, because we have to balance financial, concerns and developmental concerns as a development agency. They go hand in hand. So just to answer the question, we have invested in emerging managers in the past.
Can I add a perspective from a GP? And also, no one is an island. You need to build partnerships with other players where you complement and you're part of a broader solution altogether. And that will give you an additional edge. And at the end, what we have learned investing in more than 50 companies now is that we don't want to be the single investor. We don't want to be the biggest supplier of capital. We always like to syndicate and bring other players alongside. And collaborating in this industry is mandatory. So that will give you, you can decide which group you partner with depending on your investment thesis and on your region of focus and your stages at which you're investing. But at the end, it's not, this is an industry where, different from private equity, that they're more competitive. The collaboration is something that will give you an additional edge and can bring you, let me say that, for example, in our first fund, we were able to create 2 small investments into pre-seed stage funds. We did one in Peru because we wanted to help the ecosystem of Peru back then in 2010, 2011. And that helped spark some innovations and some other actors in the ecosystem. But at some point, we would think that we had to be also collaborative by even at some point. It might not be easy to have investments into other funds that are earlier stages, because then you have a problem of double dipping and other things. But those are the types of instruments that we can work with to keep building the pipeline of managers.
And in Mexico, we had a very good example of investing in fund managers from the government, from INADEM and from Secretaría de Economía, and it was really successful. It really made a change to achieve a huge number of first-time funds in a few years. So I hope we can do that with this new government. We don't know, but we will push for it. And if it's not available, my recommendation would be start with a small fund, invest, make a track record, and then you will be able to have a larger fund in the second fund.
There was another question here.
Yes.
Yes, please.
Hello, so I'm Sergio Martel. I'm the CEO and co-founder of Orbis 42, and I want to address a gorilla and an elephant in the room. So one is that there's no such category as climate finance technology in your radar, and I think that's really important. Let's say the elephant is what is going on with the finance gap in climate. I think that supposedly we need to be spending around $2.4 trillion a year, and we're only spending $100 billion. And mostly around nature-based solutions, which we have the solutions for most of the problems that we have, but is it that the system is broken? What do we need to find out in order to be able to deploy that amount of capital? Thank you.
Just from the perspective of an investor in the category, we do look at a lot of nature-based solutions. I think to answer your question on the gap, I think that the entirety of that gap won't be filled by private sector and private capital. And so I think that if you see more developed economies, there's the government programs, like I mentioned, the Inflation Reduction Act, are trying to push for that widening in the gap or shortening of the gap. And I think that it's not that it's not there, but it's an emerging ecosystem. And so we can't have a lot of capital flowing into the category from the venture space, particularly if we don't believe that the returns for our own investors will be there in the time frame allocated. And so it's kind of a balance. I think we're going in the right direction. We all know it's really important. That's why probably everybody in this room is here. But it's going to take time and hopefully a consortium of groups of people and entities of all countries collaborating.
I believe that all the development banks, international organizations are looking to this topic. 40% of all the operations that we need to do has to have an impact on climate. So everyone is actually trying to tackle this gap. I think in the conversation about regenerative ag, my biggest question is also financial returns, right? We need impact, but we need financial returns, and therefore we need to mature solutions that can provide both.
I'm sorry, but I have been told that we have no more time. Okay, Roger is the lead here. One more question? Okay, please.
So I make it quickly. So when you are evaluating GPs or direct targets, how you take into account three things. One is policy development, like governments pushing policy in terms of climate. Second, how you can actually factor in planetary failure or extreme condition in the future, but that's gonna impact your terminal value. And the third one is when you're actually looking into deep tech startups, most of the GPs are general knowledge and technology, so you need experts to actually validate that technology, even if they have clients or not. Thank you.
I'll take a stab at that. On the third point, usually in the funds that we look at, well, they're very good at finance, and many of the managers and the principals will have experience in the sectors they want to invest in from the past. They also always have boards of advisors who will have specific expertise about technologies who they rely on or use. And this is, kind of like an extension we see in the US, where they hire more people, and fund managers hire a lot of people with operations experience to run the companies. Venture funds, you can see that I've seen in Latin America, have definitely a group of advisors they rely on. So hopefully that will work. We're just starting to invest in these, but the people I've met so far know what they're doing. What was the first one again? I can't answer the second one. The first one I can.
So how you factor planetary failure into asset allocation?
No, that was the second one. Yeah, well, I guess we don't invest in governments or with their policies. We usually will invest in managers who will invest in countries that have forward-leaning policies. For example, as you know, here in Mexico, it's been very difficult to invest in energy for private investors. Hopefully things will change in a couple of weeks, whenever the new government comes in. But I think we usually follow the managers who know the regulations better, and they know what are the more attractive sectors to invest in, where there is positive regulation for private investment.
I don't know how to answer the planetary situation.
So thank you so much. I really appreciate this panel, and congrats for these two babies in the panel as well. Thank you. Thank you, everybody.